Starting this business was a very difficult process. Being a wealth management financial advice business, it was quite unfortunate, I think, in one sense, that we started right in the middle of the worst recession we had seen in 80 years. This was in 2008, 2009 when we started the business. So it was incredibly difficult to start the business right then. But I think one of the greatest lessons about that is that there's never a perfect moment to start the business. I think it's one of those things, if you're ready to do it, you need to get out there and you need to get it done. Because while that seemed like a terrible disadvantage, the biggest advantage for us has been that all the clients whose investments we've invested since then have started at the bottom of the market, and therefore have seen very good returns since they've become our clients. So starting a business was incredibly hard because of the nature of the business and given where the market was actually sitting at that point in time. One of our greatest challenges when we started this business was that we were going to run it very differently from the way traditional wealth management or advice businesses had been run. Traditionally, what people have done is that they've gotten their clients to pay for their business. In other words, they've marketed products to their clients where they were paid commissions or fees into the future for services they hadn't actually rendered to the clients. But a lot of those products were actually quite detrimental to the clients. The way we started the business is that we were going to say, we are going to run this thing as a business. We are going to go out like all proper businesses and raise money and put money into the business so that we have working capital instead of using our clients to pay for our business by marketing products that didn't make sense to them. So that in itself was a fairly big risk. But the way it has worked so wonderfully for us has been quite amazing because our clients have bought into that philosophy because it has come through in the returns that we have generated for them. It has come through in the service that we've been able to provide for them because we raised the money, we were actually able to staff the business properly. So we've got a very strong service team. We've got a lot more people actually in the back office servicing our clients than we do with people that are actually seeing the clients and providing the advice to the clients. And one of the biggest problems with wealth management or financial advice businesses is that clients have always complained that the guy comes to see you, he sells you some sort of product, but you never really get to see them. So the way we've created the business is that because the service team is so strong, there's constant communication with our clients. The clients feel that they're connected with the business. So it's been received incredibly well because of the way we structured the business. It was a huge risk. It was quite painful in the first few years, but it has come through quite nicely in the sense that since we actually started the business, we haven't actually lost any client.
That's amazing.
All the clients that we've lost have been either to death or one or two that we didn't actually want as clients ourselves. I'm going to answer that question in two parts. The first part is SMEs currently are really struggling to raise finance. Okay, and that was a huge struggle for us when we started our business. One, because it's a space that was quite saturated at the time, although we were bringing a very different angle to it. So it was quite difficult to convince people to lend us the capital that we were actually looking for. So we went to the traditional banks. The banks looked at our business plans and they wanted to charge us inflation plus 5%, which was, at the time, inflation was 10%. How am I talking about inflation? Prime plus 5%. So that was like 15%. I mean, that's a 50% payback before you make a cent. That was just going to kill us. So what we were able to do was to think outside the box, think outside the traditional lenders of money. We actually went up our value chain and spoke to the suppliers who could see the value in us creating a distribution for them, and that's where we got our money. So the first point I'm trying to make for SMEs today is don't think of just a traditional way of raising money. Don't just go to the traditional places where you can get money. Think outside the box. Think about the people who could benefit from the service that you're giving, who may have a vested interest while they're not owners of your business, they may be willing to lend you money because you could provide some sort of distribution to them that might actually benefit them. So the state of the SMEs, as I find now, is that the guys are really struggling to raise money because they're not thinking outside the box. They're not thinking outside the traditional ways of trying to find people that can lend them money. That's the first problem. The second problem is people get married to their own ideas. Because it's my idea, I don't want to share the benefits of that idea with anybody else. So if I come to you, I want you to lend me money, which I'm going to pay back to you over a certain period of time. And if the investor says, no, I don't want to put debt into the business, I want to put equity. So I'll give you money, but give me 30% of your business, and the guys are not willing to be flexible enough. And the thing you need to think about as an entrepreneur is sometimes it's better to own 70% of something than to own 100% of zero. So the guys need to think a little bit outside the box when it comes to how do they raise money. How do you mix debt and equity, and which is the most optimal combination that you can find on those two. And that's the kind of advice that we kind of trying to give our clients when they're trying to start their businesses.